I wanted to take this video to dive into how the actual credit gets calculated for clean vehicle credits and the new Form 8936. As I'm recording this, it's October of 2023, which means we only have the draft version of the new form so far. And that's what this watermark is about. I got this from the IRS drafts files, and it looks like it's in fairly good shape, so I don't expect too many changes between now and filing time in early 2024. So the clean vehicle credit, there's a basic process that we have to go through. It is we figure our adjusted gross income, figure our tentative tax, we figure our modified adjusted gross income, and then you check whether you're over or under the threshold based on your filing status. If you're over the threshold, then you don't get any credit. If you're under the threshold, then you figure the tentative credit, figure your total credits on your tax return, and then figure your new tax. So that's the process that we're going to go through, and we're going to go step by step here through the forms to see how that all works. Here's Form 8936. This used to look very different, but this is the new version that we're going to be dealing with. Part one is modified adjusted gross income amount. The very first step is to enter the amount from line 11 of your 2023 Form 1040, and that is your adjusted gross income. So that's before itemized deductions, that's before qualified business income deductions. And then you have to add to that any amounts that were excluded from 2555 or from Puerto Rico and such. And then that comes up to our modified adjusted gross income. And then the interesting thing about the modified AGI test is that you can do it for the current year, which is 2023, or you can do it based on your previous year, so 2022. So you do that for 2023, 2022, and then you pick the smaller of the two. Now, that is going to be your modified AGI or MAGI for the clean vehicle credit purposes. Then you go into part two. Individuals can't claim a credit on line 6. Part one, if part one, line 5, which is the MAGI that we just figured, is more than 150,000, 300,000 if married filing jointly, or qualifying surviving spouse, 225,000 if head of household. So if your MAGI is over 150K for single or married filing separate, 300K for married filing joint, or 225 head of household, then you don't get the credit. When you're shopping for these cars, that you just have to keep in mind, what is my actual adjusted gross income? Am I going to be able to qualify for this at all? And if not, then you can ignore whatever the salesman is saying and just focus on the price that's actually being paid. So then we go into part 3, which is credit for personal use part of new clean vehicles. So there's two different credits now. There's new vehicles and there's used vehicles. And we're just going to focus on the personal use part. So we go to Form 8936, Schedule A. So now there's a second page to the 8936, and that looks like this. So each vehicle is going to have its own Schedule A. It's going to have the year, the make, the model, the VIN number, the date that was placed in service. As I'm recording this in October, we're past the transition date of April 2023. And then the first question is, was the vehicle used primarily outside the United States? So if you bought this car in the US, took it somewhere else, and used it there, then you still don't get the credit, even though you bought it in the US. Does the VIN qualify for a new clean vehicle or previously owned? That's questions 5 and 6. Does it belong to a qualified commercial clean vehicle? For what we're talking about here, that's going to be a no. Part 2 is the business portion. Part 3 is the credit for personal use part of new clean vehicle. And this is going to be the credit amount based on the vehicle itself. It's either going to be 3,750 or it's going to be 7,500. We take that number and that's going to go back into the 8936 for new vehicles. If it's a used vehicle, we go on to page 2, and is the sales price of the vehicle more than 25,000? If yes, you don't get a credit for it. You have to buy the used vehicle for less than 25,000, and you have to buy it for personal use, and you have to not be dependent, and you have to calculate 30% of the purchase price. So if you buy a used vehicle for $20,000, let's say, 30% of that is going to be 6,000. And then the maximum credit is 4,000. So you're going to take the lesser of whatever 30% is and 4,000, and that's going to be the credit amount to include for calculations on the rest of the 8936. Whichever it is, new or used, that number is going to flow back into the 8936, either part three or in part four. Part three is for new, part four is for previously owned. Then the calculation steps are the same between the two parts. And if you buy multiple vehicles, you'll use both of them. The next step is to go in figure tentative tax. But you're going to pull that amount from Form 1040, line 18, which when we look at our 1040 is right here. So you have your tax from your taxable income, and then you add in alternative minimum tax and Obamacare premium tax, if there's any. And that's going to create your tax line 18. Then the credit gets mixed together with all the other credits on Schedule 3. So Schedule 3 is the non-refundable credits. It's going to be the foreign tax credits, child and dependent care credit, education credits like the non-refundable portion of the American Opportunity Credit or the Lifetime Learning Credit, retirement savings contributions, residential clean energy, 5695 credits, and so on. And you can see down here in line 6, part F, clean vehicle credit, attached form 8936. And then there's a credit for previously owned clean vehicles, attached form 8936. So that's where those numbers are going to get included on your Schedule 3 of your 1040. So that all goes into the calculations in line 20. There can be edge case scenarios where somebody might have had a tax liability, but the credits for their kids push them down below the point where they do. And so they're not going to get maximum benefit from these clean vehicle credits. And that is the key thing. So if you're out there shopping, you have to be aware of your tax situation because all the salespeople are going to be saying, hey, this car qualifies for 7,500. This car qualifies for 3,750. This car over here qualifies for 30%. And even though you're paying us whatever the amount is, let's say $50,000, you're only really paying such and such amount. It's only really 42.5. You can think about it that way. And they're going to try to push people into this frame of thinking. And you have to keep in mind all these qualifications that go into getting the tax credit as they're discussing. So if your income is too high, you're not going to get the credit. If you don't have the tax liability, you're not going to get the credit. If you are shopping for a used car and you pay more than 25,000, you're not going to get the credit. I just want everybody out there to be aware of these issues and to make smarter shopping decisions. If you're in the market for a new car, then great. If you want to buy electric or hybrid or fuel cell vehicles, then that's great too. Just don't let the tail wag the dog. That's always a big refrain for us here at Tax Sherpa, where year-end spending for things that you're going to buy anyways makes sense. It does not make sense to spend more money than you would have in order to save on taxes. So just be out there, be educated, and make good decisions for yourself.